The composition of Australia's top 20 stocks shifts as big winners and big losers emerge. The government outlines changes to personal bankruptcy laws, and Channel 10 owner Paramount set to be sold in a major shake-up to the global media world. Welcome to Fear and Greed, daily business news for people who make their own decisions. It is Tuesday, the 9th of July, 2024. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Sean, the main story this morning, the composition of the top 20 stocks on the ASX is changing fast, with stalwarts like Telstra and Woolies and Transurban slipping, while others, including property giant Goodman Group, become top 10 companies.
The top 20 stocks on the ASX, let's call them the mega caps, comprise 56% of the market capitalisation of the stock exchange in Australia. By reputation, the large caps, the mega caps, are solid. Often they pay dividends and you're not supposed to lose your capital. In contrast, the mid caps, let's say, 20 to 100 or so, they're supposed to provide plenty of growth opportunities, while the small caps are more speculative and theoretically you can find a bargain. But over the past 12 months, it hasn't played out that way, with some very big moves in the top 20 stocks. While the ASX20 is up around 8% over the past year, Woodside Energy Group is down 16% and no longer a top 10 company. Telstra, with its 1.3 million shareholders, has also slipped out of the top 10. It's now the 13th largest company on the bourse, having lost 14% of value over the past year. Woolies and Transurban are the other biggest losers within the top 20. Others have fallen off the top 20 list. Coles, Brambles, ResMed, they've all fallen off that list of mega caps. Shareholders in those companies have all lost capital over the past 12 months or so. That's not what you necessarily expect from one of the really big companies.
All right, so there's plenty of big losers there, Sean. What about the best performers? Where have shareholders made money?
Well, a year ago, Goodman Group wasn't even a top 20 stock, but its share price is up 78% over the past year. It is now the country's 10th largest company. We've talked plenty about the banks. They remain dominant. We've spoken less about Wesfarmers, which of course owns Bunnings and Officeworks, but it also owns a pharmacy business, a lithium project, a chemicals and fertiliser business, among plenty of other things. Australia's biggest conglomerate. Wesfarmers employs 120,000 people. It's got more than 500,000 shareholders. The group began life as a Western Australian farmers cooperative back in 1914. A few years back, wasn't even a top 20 stock. After appreciating 40% over the last year, it is now Australia's 8th largest company. Other newbies to the top 20 this year are WiseTech Global, Aristocrat Leisure, the gaming machine manufacturer, REA Group, which is the online property group. The point of this is that over the past year, some of the biggest companies haven't been the steady rocks of the ASX. And while many mid-caps and small caps have struggled, some of the large caps have provided the best and worst returns.
All right, let's take a look at yesterday in particular. How did local markets go?
The S&P ASX 200 closed down nearly 1% to 7,763 points, with a drop in iron ore futures hitting the big three miners. BHP, Rio and Fortescue Metals all dropped more than 2%. Energy stocks also underperformed, as did healthcare and real estate investment trusts. Wesfarmers, right on cue, was the best of the mega caps, rising 1.3%. Suncorp fell back more than 2% after Macquarie analysts downgraded the group. What's kind of interesting in that, it said it's a bit expensive at the moment, its valuation's a bit high, but also a La Nina weather pattern and the group's relative low reinsurance cover has worried analysts in that case. Core Lithium said it mined more of the silvery white metal than expected, and notwithstanding the slump in lithium prices, look at your eyes roll when I say silvery white metal.
It wasn't so much rolling, Sean. It kind of fluttered a little bit because I have never heard someone use the colour of lithium to describe it before. I mean, obviously when you're talking about gold, it's self-explanatory. I have never heard lithium described as the silvery white metal before. It's very, very evocative language.
Oh, very evocative. And that's how it's always described, that silvery white.
Oh.
I've never seen it in real life, but I'm just assuming it's true.
I'm Googling it now. Yeah. Well, you're all right. It is silvery white.
Yeah. Absolutely. Anyway, we have had a slump in lithium prices, but Core Lithium's results yesterday sent its share price up 10%. Another really interesting company at the moment is GQG Partners, the fund manager. It said funds under management has reached $230 billion, almost $10 billion in US its last quarter. Its share price initially jumped on that, though did finish down more than 3%. The stock itself is up more than 70% in 2024. The share price of IDP Education's worth a mention as well. Now, IDP, of course, provides international education services. Its share price hit its lowest point in almost 4 years yesterday, down another 1%. IDP offers services in Australia, Canada, and the UK. As it turns out, governments in each of those are tightening visa and immigration rules, reducing potential customers for IDP. Its share price is off 28% this year. And just very quickly, there's been a bunch of gold miners reporting quarterly production figures. The hard, yellowy rock, don't know, gold's gold, isn't it?
That's the opposite of the silvery white metal.
Yeah. Ramelius did pretty well. Its share price rose 2%, 293 ounces last financial year. Regis said it mined a bit at the lower end of expectations, 418 ounces for the year. But the All Ordinaries Gold Index actually ended higher for the day yesterday. What I always think is sort of interesting, so Regis, 418 ounces for the year. Now, we talk about, the amount of gold discovered and mined over history around the world could fit under the Eiffel Tower. The Eiffel Tower's big, we get that, but still, 418,000, it's not actually that much. I suppose if you're going 418,000 times, $2,300 US an ounce, you're kind of ending up with lots and lots of money. No idea what that is. What's that? I'm not even going to try and do it in my head, Michael.
It's much, much money.
Yeah, much, much money. But yeah, sort of 418 ounces, it's not a huge amount for all that effort in that. I suppose it's just worth so much money. It's worth mining it.
Hey, Sean, what colour is uranium?
Well, that's a good question because you always think of it as yellow, but maybe it's not.
Because of yellow cake, don't you?
Yeah. Totally.
Well, do you know what colour uranium is described as?
What is it?
Silvery white.
Ah, there you go. Oh, you wouldn't want to get that mixed up, would you?
Yeah, those are two that you want to keep firmly in separate buckets.
Yeah.
I'm assuming if you're mining them together. I just wanted to share that because you've got yellow cake, then you've got silvery white uranium, and then you've got silvery white lithium. I've learnt so much today, Sean.
Now, I tell you someone who can tell you more about commodities, Michael.
Is it Vivek Dar by any chance?
It's our man Vivek. Yes, it is.
This is a great interview that you have coming up after the show today. You're speaking with Vivek Dar, who is the Director of Mining and Energy Commodities Research at Commonwealth Bank. He would be the expert in all things lithium and uranium and, of course, gold.
Yes, he's been on the show a few times now. I love talking to Vivek because he puts things simply enough for me to understand. We talk about why gold is doing so well. We talk about why iron ore prices have come off a bit, though he's still a bit of an optimist on iron ore prices. But the part I really like is when we talk about gas and LNG and how the pricing mechanism for those commodities work, which always confuses me. So Vivek sets me straight. Fantastic interview. Would well recommend this one.
Yeah, and we'll have to get him back again soon to talk about uranium.
Yeah, we will. We will indeed.
Oh, it's a great chat. It's well worth listening to. It's coming up after the show. International market, Sean, what's going on there?
Well, the big news this week comes tomorrow Australian time when US Federal Reserve Chair Jerome Powell delivers his semi-annual monetary policy report in front of the US Senate Banking and Housing Committee. Then there's the consumer price figures on Friday Australian time. The Fed has said it wants to see several months of receding price pressures before it lowers rates. I'm sure the politicians will be asking Jerome Powell all about that. Oil prices remain steady, even though there are a couple of very different threats to production at the moment. Brent's trading above $86 a barrel, up about 8% over the past 5 or 6 weeks. But the factors are at the opposite ends of the spectrum. The first factor affecting the price is Hurricane Beryl. Well, it became a storm, but overnight it was expected to once again become a hurricane. We've been following this as it went through the Caribbean. It's expected to rapidly strengthen as it nears the Texan coast, with oil companies taking precautions. That has put pressure on oil prices. a storm. The second factor is bushfires in Alberta, Canada. Production in the region is being threatened, adding to the pressure on oil prices. So on one hand, at the bottom of North America, or the south part of North America, you've got horrendous weather and rain. Towards the north, you have bushfires. There you go. In currency markets, the Aussie dollar has appreciated against the greenback. It's buying 67.5 US dollars. Bitcoin and most other cryptos are trending lower on the back of potential sales of tokens by creditors of the failed Mt. Gox exchange, the Japanese group. We spoke a bit about that yesterday. It's begun, or the creditors have begun returning about or up to 8 billion US dollars worth of Bitcoin, certainly putting pressure on the price.
Sean, we got a little bit off track there with uranium and all the silvery white metals. We have a fair bit to get through, so we better take a quick break. We'll come back in a moment with the rest of the day's business news. Sean, the Federal Coalition has pulled ahead of Labor for the first time in New South Wales and increased its lead in Queensland, though it still lags in Victoria, according to a state-by-state news poll.
In South Australia, the contest has tightened, but the Coalition has lost significant ground in Western Australia, which was the key to Labor's 2022 election victory. An exclusive state-by-state news poll demographic analysis shows the political contest tightening over the past 3 months, with Labor leading the Coalition on a reduced two-party preferred vote of 51 to 49%. For the first time, the Coalition now enjoys majority support among male voters, with the female vote still marginally favouring Labor. The results confirm a continuation of a trend that, if repeated at an election, would cost Labor its parliamentary majority and force it into a minority government with independents. Based on the results, Labor could stand to lose a couple of seats in New South Wales and potentially one in Queensland.
Sean, the threshold for involuntary bankruptcy will rise to $20,000, and bankrupts will have their official records cleared after 7 years under an overhaul of personal insolvency laws.
The Albanese government will also extend the time frame for responding to a bankruptcy notice from 21 days to 28 days and will scrap debt agreements as an act of bankruptcy under the legislation. The amendments should ensure a fairer outcome for debtors in the personal insolvency system and reduce the stigma currently associated with entering into bankruptcy, according to Attorney General Mark Dreyfus, who also launched consultations for a mini bankruptcy regime known as the, and I quote this, minimum asset procedure that will allow debtors who meet certain criteria to start afresh soon. Under the proposal, people who owe less than $50,000 and have minimal assets to repay debts will be able to apply to participate in the procedure, less restrictive than bankruptcy, lasts for just 1 year. The whole idea is that people, particularly when there's not a huge amount of money, don't get this mark against them for 7 years or so.
Okay. Now, the total value of new housing loans fell by nearly 2% in May, with the biggest fall coming among first home buyers.
While the value is down during the month, over the past year, new home loan commitments have actually risen by 18%. Now, loans to investors have grown much faster than loans to owner-occupiers. New South Wales, Queensland and Western Australia are leading the way in terms of new loans over the past year. The loans in the Sunshine State actually now exceed Victoria. In fact, the loan size in Queensland, on average, is about $580,000. Victoria, it's about $566,000. That state, Queensland, has certainly grown much, much faster than Victoria.
Copper and gold developer Rex Minerals' share price jumped 60% yesterday after a bid by a group backed by Indonesia's wealthy Salim family.
Yeah, that's what you want to be on, don't you? 60% in a day.
That's not bad, is it? It probably doesn't happen that often, though, really.
No. Rex has entered into a scheme implementation deed with the company. It's called MAC Metal Australia. It values the miner at $393 million. MAC is already a major shareholder in the South Australian miner. The board of Rex supports the bid. It's not quite there yet. We'll have to undergo Foreign Investment Review Board and shareholder approval.
Okay, turning to international news now. Left-wing parties in France have topped the second round of polling in the parliamentary election in a shock, really, that pushes Marine Le Pen's right-wing populist National Rally into third place.
Pretty remarkable, this. French President Emmanuel Macron's coalition of centrist parties did better than expected, and pretty much it shows that his high-risk strategy of calling a snap election to nip the growth of National Rally has worked. But it hasn't really meant success for his own coalition, with the left wing new Popular Front set to win around 180 seats in the National Assembly. Now, the new Popular Front is a mishmash of politicians. It includes socialists, communists, Greens, and the hard left France Unbowed. Macron's coalition will end up with about 159 seats, National Rally 143. It means France will have, I reckon, the most hung parliament I've ever seen, basically split between three blocks. A coalition of two of the three is very, very unlikely because one's extreme right, one's extreme left, and one's in the middle. There's no new election that can be called for 12 months under French parliamentary rules. So it would be really interesting to see how you actually govern a country when no one's going to agree with each other.
Yeah, that is very well hung indeed.
You were waiting for that, weren't you?
I'm sorry, I had to.
You couldn't stop yourself.
I just noticed I just started to grin halfway through that.
Yeah, I knew where we were going to.
Golly, I'm sorry. I shouldn't do this to us. You have so much credibility, and every day you just lose a little bit when you're sitting in this studio with me. Back on track, Sean. Indian Prime Minister Narendra Modi will visit Russia this week for the first time in 5 years, even though Moscow is growing closer to New Delhi's main rival, China.
Modi is set to meet with Russian President Vladimir Putin during the visit. According to Bloomberg, senior Indian diplomats do not expect any major announcements, but the visit certainly signals that the two sides remain close. Russia's growing friendship with China, though, is a sticking point for the two countries. Relations between India and China have been very poor ever since a border dispute erupted in 2020, though the two sides have agreed to talks to resolve the disagreement. Moscow will be Modi's first bilateral visit since he won a third term in office last month. His decision to travel to Russia rather than Bhutan or Maldives or Sri Lanka, where an elected Indian Prime Minister tends to go first, is very much a break in convention for Indian leaders.
Finally, Sean, Paramount's board, I mentioned this at the top of the show, is set to agree to merge with independent studio Skydance, a deal that would shift control of the historic Hollywood group from Shari Redstone's family to billionaire David Ellison.
The deal is set to be signed any time, according to a report in the Financial Times. New York Times saying the same thing. And it means Skydance will own CBS, MTV, the Paramount Movie Studio, and Network 10 in Australia, among others. Any deal would come just weeks after Redstone blocked a deal with Skydance. Now, Skydance is backed by US private equity groups Redbird and KKR. While Ms. Redstone owns only 10% of the stock, she has 80% of the voting rights. It hasn't been an easy road to get to here. During a very chaotic, highly public bidding process involving several rival bids, Paramount's chief executive and 4 board members left the company, disagreeing with Ms. Redstone. Assuming the deal is done, it would pretty much close an 88-year chapter of her family's involvement in the entertainment business. David Ellison, the guy taking over, is the son of Oracle founder Larry Ellison, which was very handy when he wanted to bankroll films like Mission Impossible. David Ellison was also an actor, Michael. Let me tell you the names of a couple of his dramas. Never really made the big time, but one was called Fly Boys. But my favourite, The Chum Scrubber.
What's The Chum Scrubber about, Sean?
I have absolutely no idea, and I don't want to know. Do you?
No. And I have never heard of Flyboys either. But you never know. We could hear about more of these kind of series featuring David Ellison now.
Yeah, well, I think he's given up the acting. He's just going to be a manager now.
Oh, yeah, fair enough, I suppose.
What's really interesting here is what happens to Network 10, because it is the third free-to-air commercial network here. And so just whether Paramount want to keep putting money into it or not, going to be fascinating to watch.
Yeah, it certainly shakes things up just a little bit. Up next, Sean, is the Fear and Greed Daily interview. Vivek Dar from the Commonwealth Bank is your guest today.
Yep, all about what's happening in the gold market, what's happening in iron ore, and also what's happening in gas. When we say gas, we mean that very broadly, LNG as well as East Coast gas in Australia. Great interview with Vivek. Always puts it very simply for people like me.
Yeah, it's coming up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au, which is also where you can sign up for our free weekly newsletter out tomorrow. Comes out about mid-morning on Wednesday, so jump in now, head along to the website, put your email address in, and you will get the newsletter when it is released. Thank you, Sean.
Thank you, Michael.
It's Tuesday, the 9th of July, 2024. Make sure you're following the podcast and please join us online on LinkedIn, Instagram, X, TikTok and Facebook. I'm Michael Thompson and that was Fear and Greed. Have a great day.